because we're more regulated, things take slower to adjust here. And we could see labour costs continuing to push higher right through the next couple of years as people need to play catch up, quite rightly. And, we've talked about insolvency and why it's been low. And obviously the traditional insolvency mechanism is banks and debt. That's been sort of curtailed in the last decade by low interest rates. Then the ATO decided to step out of the game in the pandemic and have only just started to come back. But one feature I think of the next 5 years that could put pressure on a lot of businesses, an inability to pay the market wage rate. And if businesses can't afford to pay workers the wage rate that's in the market and stay in business, then that could be one of the other triggers that could get insolvency starting to rise.
The last time that you and I spoke on Lunch Money, it was mid pandemic really, but I remember I was saying, where are all the insolvencies, and you showed us a graph of the savings. So, I think you said there was 150, billion or whatever it was in household savings and also in business savings. So there was this enormous hollow logs in the economy soaking up the pain. So are you saying that certainly at the business level, those hollow logs are still there at the moment, and that when eventually the wage pressure is going to happen?
Yeah, I mean, look, there's certainly been a significant amount of support that's helped provide buffers, and that's to good and bad businesses and good and bad households. And it certainly could be part of the story about why businesses that either need to be fundamentally restructured or go haven't, because they've been getting this support. I mean, I identified this as an issue prior to the pandemic, where our interest rates being well below what you'd call a natural interest rate sort of curtailed that capital turnover mechanism, which business insolvency is a critical part of. I mean, if we want a market economy and the benefits that it brings in terms of competition and innovation and rising living standards, you also need to turn capital over. And the discipline of that is historically the interest rate. We started to lose that, obviously, in the pandemic. The ATO stepped away, the bank stepped away. So, yeah, there's buffers there, and we're starting to see insolvencies rise, but there's potential for them to rise quite a bit over the next few years.